weekend. Ira Epstein, and here we are on Friday, the 24th of February. It's hard to believe we're going into March already, but the 24th of February, 2023, it's the weekend, so we're going to do the weekend edition of the Metal Report. Now, I have been telling you in the gold market that I thought we were going to pull back into the 1814, then 1812, then 1810 area. If you've been watching me day in and day out, that's what I've been looking for. We got today to 1815.50. Feel good about it. I'm in my ballpark. And I started saying this substantially higher in the market. The reason is I thought the dollar would get bullish. I think that with 5% for all purposes, a 6-month T-bill, why do you want to own gold? That is the dilemma that you're really facing, all right? You buy gold to make money, secure yourself. Well, at 5%, you're about even with current inflation. The PCE price index today came out at 5.4%. So if I look at that, one of the Fed's favorite indicators, and you're very close to that on a T-bill, why do I want to own the gold market? You may not agree with me. That's the thinking of that. You can see that you got smashed in the stock market today. Energy prices, however, did pretty good. They're the surprise. And natural gas, big short covering happening. We knew that. We talked about it. We expected it when you lost the bearish embedded reading. We talked over and over. If there's one thing that's been present in these markets now, it's how important the Bollinger Bands have been. When you look at them and you understand when they're embedded or not embedded and you hit them and what to do, you take out of your pocket here both arms and you got two weapons to work with, bullish and bearish, lightening up, moving away from a market. It's no longer interesting. Let's go somewhere else with the money. It's so important. If you don't do that, please, I beg you, learn how to work with them. You may not need my course. You need a course on it. They're that important. So when I look at the gold market, we've been up and we're coming into line now to challenge on a monthly basis. This is just a monthly chart of closes. That's where the neutral number is, 1802.30. So we've had a bullish bias in this market ever since we got over it. Remember, this is a monthly basis. So this market in November was still bearish and it flip-flopped on you in December. So it has stayed flip-flopped December, January, and so far February. Don't know how it'll end for February, but that's it. Neutral would be 1802.30. If it gets back under it, for the moment at least, the bears take control and wrestle the bias to the bear side. On the weekly close, the same theory. Have I not been telling you I'm expecting this down every single day? We've been talking about it here. And bingo. You're falling back finally, 1812.70 on the daily basis. There's a difference between the monthly, the weekly. On the weekly, it's the weekly basis, but on a day-to-day during the week, 1808.80, I hit my number. This is why I'm so excited, all right? That's where I thought the market was going. Now the game begins for me, and now the question is, do we see cycle lows, or does the market keep feeding because the interest rates are going up and it has to work itself even lower? As you can see on the chart, you've got a swing down. You still have the pattern of higher lows, higher highs. On a pure swing line, you're bullish until this market takes out 17.19, which is what? Almost $80 away. The market's still all right there. The market has found itself into the support now, and I was expecting this when we talked about it, of the 18-week and the 100-week moving average. So, are the bulls nibbling right here? They are. But the risk is rather sizable, but that's what I think they're doing. What about Bollinger Bands? When you hit the Bollinger Band up here, and you finally did, I don't care if it goes higher. I care that that's where the pros taking off money, and they come out of the trade. Now, let me show you what I mean by out of the trade. They come out of the trade if you lose the embedded reading. Embedded means the red and the blue are going sideways. I'm looking for another example, and I don't have it. I got to stay with this one. They're both over 80 going that way for a certain period of time at a minimum. I teach that in the course. When the red pops out of it under a 79 reading, out you go. You are now looking for price. to get back down to this combination. I'm wrong in my thinking if you go back up over the most recent high, whatever that is. Got it? It's really that simple. So here you are last week, here you are this week. Bingo. By the way, the red here just means that the February contract is gone. So our system tells you what's going on through there. Bingo. The objective hit. So now that tells me the pros, because you still have the trend up, they're probably nibbling in on the long side. They could use futures, options. They'll have to figure it out. They bought it on a weekday. Is the market still anything? Well, it's no longer overbought. In order to be overbought, you need one of these numbers over 70. When I come to the gold-silver ratio, unfortunately, silver continues to lose to gold. That's why the ratio is going higher. And you can see how weak this market is. Now, in looking at this market, the big resistance was here. First, I thought it would start right here. And that was the combination of the 200-week and the Bollinger Band. And I would have been telling traders, out you go there. Then the market embedded later on, which meant that on the buys, traders were buying. You now know that's not your resistance, you're over it. So you look on the chart, it's either the Bollinger Band or the 100-week. If there's no 100-week, it's just the Bollinger Band. And if we come back here together, and I want to show you this because it's so darn important. This is the week, right hit this price, you lose the embedded reading. You got a 72 reading. If I go to the week before it, both numbers are still over 80. I know because I was guiding some people on it. And they said, what do I think? I said, as a minimum, I think you'll go to the 18-week average. You might even, if you hit stops, get down to 2137. Beyond that, I can't tell you anything because it's not trending. You have a higher high, lower low pattern. This is what the market did February 10th. This is what the market did the 17th, and this is where you're at. Now, if you were to ask me if it wants to continue down, then 1961. You're already oversold. Oversold doesn't involve getting new shorts involved. That becomes the problem for the market. In other words, if you weren't oversold, I could see a little more action there, but oversold, algorithms, me, other people, they'll say, hey, when you get a market under whatever your term is to say overbought, oversold, one of your checklist items for a trade that says don't make a trade, you're not going to make a trade. Whatever yours is, I know what mine is. I teach them all in my charting course. In the copper market, this was the sucker week. We came in on Tuesday, copper went up 11 cents. Going, what the heck? It's got to be China buying. The pent-up demand, America's closed for President's Day. That was the high, baby. It just went down the rest of the time. And it's in a downtrend in terms of this, but it's not a real downtrend. The bias is up. This is a corrective move in a market that still has upside bias. The support's 389.50. We got to see what it does there. It is not a buy at that number, the way I teach charting. Momentum is down, but it's not a sale either. I don't see a sale happening on it because of the dollar risk. In the platinum, I think the professional money is covering all shorts right now, this week, right here. First challenge of the Bollinger Band. Goodbye. You're not embedded. So long. Dollar index. You ever hear of what's called a bear market rally? And I know you're going to say, Ira, the dollar's so strong, you don't know what you're talking about. I understand. I hear that all the time. My wife starts telling me that daily. In looking at the market, here you're down. And here you have the embedded reading. I'm bearish at that point. Lose this, get this over 21. And what does Ira say? I can't be bearish anymore. Now I think the market's going to go to the red line, 105.14. The high of the week you're looking at is 104.60. I think there's another 50 or so points in it. I think that the market, unless it loses and re-embeds again, it can only re-embed the week after it loses it, and it's on a weekly chart, it's rare it does it. Not when you're that far away, down to a 30. You'd have to drop back under 20. It's a third. It's a lot. It can happen, but it's a lot. I think you're going to get to that number. And bingo, you got there. So now, as bullish as everybody is on the dollar, I don't know that I am. I'm not bearish. That's for darn sure. But To buy it over the 18-week average at 104.77, I got to put a stop at 102.38. That's too much money for a guy like me. Way too much money. Why do you want to risk $2,000 on a contract? And it's the first move into a resistance point. You wait and you see what the market's going to do. But I don't want you to wait. I want you to understand that a lot of this you can learn yourself just the way that I'm showing you here. And that's my news, by the way. And here you come. And I make my charts do everything. I've got weekly, dailies here, and I got some charts 4 to a page. But when you do it, what I want you to do is be able to work with these Bollinger Bands. They're simple to learn. You will learn it over the weekend. They work the way I teach them. You can apply them. The word work is probably the wrong thing. You can apply them to everybody and you'll see the outcome of them. I can't guarantee what happens. I can guarantee that I put everything I have in this and I hang on it every single day, and we have a fleet of people that use it, and I think you'll find it interesting. How do you learn this? It's simple. It's all in a simple course. I think it's 9 or 10 chapters, not very much to it. We give you the charting software. We give you the data, the past data, so you can see how it unfolds. Then you get, in the course, you get to come into my morning videos where I review it Monday through Friday, every single morning with you, and you learn both in the spiders, by the way, it's included for free, and your futures. If you're already a subscriber, say la vie. If you're not, you're going to see how that works. That'll bring you into the fold, I'm pretty sure. How do you get this? Take a look at what we've got.